It's Drip Trader here today, and today we're going to be talking about one of the best indicators that I use on a day-to-day basis to find good quality setups for me to trade. So if you haven't already, you can go ahead and download Thinkorswim for the internet, or if you already have it, just head over to this chart section right here and you'll click on it. And in case your chart might look a little bit different, you can change up some stuff, such as clicking on this box right here to allow you to have like 2 charts and 3 charts and such. But I usually like to stick on 1 to 2 charts per day. And so afterwards, what you go ahead and do, you'll click on Studies. You'll click on Edit Studies. And once you get to Edit Studies, you're going to type in Standard Deviation. And so you should find this first right here, Standard Deviation Channel. You'll click on it, and you click on Add Selected. And so you click on Apply. So this basically means 90 to 95% of the time, that stock will stay in this particular price range 90 to 95% of the time. Now you can add some more studies to this and try to edit it, which you're going to do in a couple seconds here. But this is just a good indication like where the stock will be at, and like what's the lowest point it'll get to and what's the highest point that it'll get to. And also I suggest you guys using different time frames. So I'm currently on the 5-minute chart right here, but you can change this, such as clicking on here. You can change it to the 10-day chart, 20-day chart, and also the 180-day chart as well. I like to use those on a really good basis. And as you can see, it can tell you like when the stock is like way too high, or if it's way too overvalued, it needs to come down. So it's just a good indication here. Now, sometimes it's not always correct, but it's a good sign to use whenever you're trading and stuff like that. And so even for one example that I like to use is Target. So if I go over to type in Target here, you know, Target is like really overvalued above this chart. Now it could keep going up. It's because, you know, we're in a different type of environment right now where like Target and Walmart and all these retail stores are striving right now because they're producing a lot of stuff that most people need. Now, what I want you guys to go back and do is click on Studies again, click on Edit Studies. We're going to type in Standard Deviation again. So we're going to add 2 more. So I'm going to click on it, Add Selected, and then Add Selected again. Now they're all the same, but we're going to edit them. So I'm going to click on this one, the second one here. Oh, actually, I'm going to edit this first one. And I'm going to change this one to 1.0. And I'm going to click on OK. I'm going to leave this second one as 2.0 right here. I'm going to click on this third one and put it as 3.0. So now afterwards, after you have 1, 2, and 3 here, you can leave the rest of the information alone. You click on Apply. And now you pretty much have like the total standard deviation chart of where the trade will mostly stay in like 99% of the time. But what we're going to do, we're going to edit some colors here. So I'm going to go ahead and click on this one for the first one. I'm going to change this color to, for example, let's see here, like green. And don't forget to click on this one, upper line, change to green, and go to lower line and change this to green as well. Click on OK. I can do the second one here. I'm going to change this to a different color. Change this one to red. Change this one to red. Click on OK. And I'm going to click on this last one right here as well. And I'm going to change this one from probably just yellow. That might be good for me. It might look a little different when we finish it out, but nothing too bad. You click on Apply. And so now you basically have this chart that tells you like 90 to 95% of the time, you know, a stock will stay in between these price ranges. So currently right now, Target is like a little bit highly overvalued, but this doesn't always tell you like accurately. Like for example, stocks that are like going super high, such as Tesla. So if I type in Tesla right now, you'll see that, you know, beforehand, when it was like around this price range, this standard deviation thing, this top one right here was about like right here. So as the price of the stock increases or decreases, the chart will adjust itself to show you how much it's going to change by. And so what I like to do, I usually use like a 1-day, 1-minute chart sometimes. And so I'm gonna zoom in right here. And so basically like in the morning time, it's like still in between this range. So this green one is this 1.0 range, and this red one's the second one, and this one's the third one right here. And so it's like 90 to 95% of the time, you know, it's going to stay in between this range, and sometimes it'll start going out. So like on Wednesday or Thursday when it started going up, you know, it started going above this yellow line right here. But, you know, I told you like over time, it starts to adjust and change itself. So it tells you when that stock starts to increase, you know, adjust itself based on that. So now it's saying like the maximum or like the 0.03% chance that Tesla will get out of the range is 2274. So it's a small possibility for that, but it's not impossible. So it just shows you, like the smallest one too over here, which is 1904. And so I usually like to look for stocks that might be falling below these ranges. And I usually go for like a 5-day, 5-minute chart because it's best to look at the weekly and see how things are going. And also, for example, one stock that I really like was eBay. And also basically just tells you like good points where to buy and sell. So for example, eBay at this top green line, every time it hit here, people start to sell off every single time. So it's a good indication to use. I'm also going to go over some other indicators such as the RSI and MACD, but this is just the main one that I use on a day-to-day basis just to tell me when it's a good time to buy, when it's a good time to sell. And, anything that's like a really good stock such as Google, Apple, Microsoft, if I ever see them, for example, like in this bottom range, like at the very bottom, close to this red, close to yellow, I'll go ahead and buy, and I'll hold it for like about a week or two, maybe even a month, because I know these are really good stocks, so they have the opportunity to start climbing back up again. And so for example, if I spread out here to this 180-day chart, I think I bought in around like this time frame when it's at this middle line right here, so around like 200, and it rolls back up to like 217. That's when I sold off around that range. And so this middle line is like basically just like the very, very, very center where the stock stays most of the time. And so just be sure to look out for that. And just I prefer to use a 1-day, 1 minute. And so I usually click on this one. And so over here, if I type in Microsoft, over here, if I change this one to a 1-day, 1 minute, I like to use this one. I'm going to add on, well, I'm going to add the studies in a second, but I just like to change this one back to a 5-day, 5-minute. So I look at this one right here, and then I'll go ahead and add the studies. And I'm going to show you guys how to save this study as well. So you're going to click back on studies, click on edit studies, and click on save as set. So you click on save as set right here. You're going to change this one to standard deviation, or you can name it whatever you want to. So I'm going to just name this one standard deviation. Click on save, and now this is saved inside your Thinkorswim platform as one of your indicators that you can use. It's already saved, so you click on OK. And then now if I go over to the studies on this second chart, I'll click on load study set right here. I'll click on standard deviation. So now it tells me that Microsoft is in between this green range. So you can either buy at the bottom here and hold on, or just like hold it for like a little bit of a day trade. So if it's at this bottom, well, you can't, this is like pre-market after hours. So this gray area is pre-market and after hours. So you can use this too in case you can trade pre-market and after hours. You can just buy it and just sell at the top, or you can just hold it for a long term if you're looking at a longer time frame. And also, I really hate this volume thing at the bottom here. So I usually just click on this and just drag it down so it gets out the way. So it's just a great way to look at things, and also look at the bigger time frames. Like I always said, look at the 10-day, 20-day, 30-day, 180 days, and just see like where this stock is and see what's a good buying opportunity, and look at it at the lines and see, hey, is it approaching this top green line? Is it approaching this top red line? Is it approaching this top yellow line, to see if it's a good buying opportunity or a good selling opportunity? So just look through that. And I hope you guys enjoyed this video. If you guys have any questions or concerns, please leave a comment down in the comment section. And I'll also leave a link down for a Webull, so you guys get 2 free stocks if you deposit $100 into your account. Have a great day, guys. And I'll be posting some more videos soon, so stay tuned.